On the economic calendar for our country. We're just over an hour away from the budget speech. Let's get more now from our Nompu Siziba. She joins us from Parliament. Nompu, good afternoon once again. We could see an increase in VAT. We could also see an increase in tax for higher earners. The DA have said that the government is trying to tax itself rich. Would you agree?
Well, I don't know about that, but certainly you're right. There are all these taxes that are expected to be raised, and of course, quite controversially, VAT, which hasn't been raised in the past 24 years. Many experts in the tax field really believing that's likely to happen because it's so easy for government to raise significant sums. People are talking about a 1% increase being equivalent to about 22 billion rand. So it would be very easy. Whether they're going to impose nuanced type of VAT increases that are more concentrated towards those who are purchasing luxury goods or whatever, we have to wait and see. But a blanket one might be controversial. They may have to do a bit more zero rating on certain products for the poor. We have to wait and see. That's the expectation. But in the meantime, I'm joined in studio by Andrew Coutts. He's the head of intermediated distribution. He's at Sanlam, and he's going to give us some advice as to what we can do in an environment of higher taxes. Thanks very much for joining us, Andrew.
Thank you, Nompu. Nice to be here.
Good stuff. Now, as I mentioned, it's been 24 years since VAT was raised to 14%, and many in the sector of tax believe that we are going to see this VAT increase, despite the fact that it's quite regressive. Why do you think so?
So I think the Minister's got a real challenge. We've heard about it earlier in the show. We have a revenue gap that has to be closed. And I think the challenge is that only 13% of our population are registered for personal income tax. So that income tax base, even if you do go and change personal income taxes, it's just not necessarily big enough to make the difference that we need. There's a fuel levy. That's another alternative that can be considered, but we also have the reality that almost a third of a current cost of a litre of fuel already goes to the fuel levy and the road accident fund. So there's that consideration. And I suppose we could look aggressively at sin taxes and things like that. But none of it is really going to be enough on its own to really close that gap that we know about from the revenue shortfall in the collection space, NHI funding, and of course private education, etc. at a tertiary level. So those are some of the challenges. Closing the gap is just not going to be easy without doing something different, and that's why we think that perhaps that becomes the only real option left on the table to try and close that gap.
So you work in the area of insurance and risk, and what do you see as the potential risks if we do get into an environment of higher taxation?
So what we're watching from a risk perspective is very much, I suppose, focused on three things. One is disposable income for the consumer, and then what that means and how you spend that money going forward. So your choices become less. You have to make tougher choices as an individual in tough times. So what do you cut back on from a spending perspective as both a business and as a consumer, and how does it impact risk? We're also looking very much at the impact on what might happen with the exchange rate. So we know Moody's is sitting at the background, waiting to see what's going to happen with the budget. And the devaluation of the rand has good and bad things. A strong rand on one hand is probably good for inflation, and that's good for interest rates, and that's good for economic growth. A strong rand is perhaps bad for our mining sector and our agri-environment where there's direct pressure on that. So a strong rand has various impacts on the economy. It's a nice discussion to get into, but from a short-term insurance perspective, it's actually more immediately felt, because if the rand weakens because our debt funding gap becomes just too big, immediately what happens is the cost of imported parts goes up. And so if you just insure your vehicle, for example, when you have an accident, most often we're importing spare parts to put back on your vehicle. So there's an immediate knock-on effect of the devaluation of the rand on every individual on the ground. And I guess the third key factor in a risk perspective is very much about what we call in insurance industry systemic risk. So that's your water supply. We currently sit with some places no water supply, low water pressure, poor drainage, stormwater drainage, which blocks up roads and the highways, lack of compliance to building regulations, fire departments that are perhaps under-equipped, and then of course electricity supply issues. All those things fundamentally impact risk on the ground for businesses and consumers.
Now, with that risk, there is a danger, isn't there, that for people in your industry, that people will stop paying their premiums if they're paying higher taxes and they're feeling overwhelmed by the financial burdens?
Absolutely, and I guess that's where it's a good time to have a conversation about this. So in an environment where we're making tough decisions as a country and we're balancing this fine line, there is a consideration. We only have so much disposable income. The first thing you do you look at your debt, and then you look at your recurring expenses and say, I've got to manage my recurring expenses. And one of those obviously is your insurance premium. And you might be tempted to say, well, I can do without insurance. I guess the risk is that this is probably the worst time to do that, because rebuilding a business in tough times is a lot more difficult to do than when the wind is at your back. And the same goes for a consumer. If you have a car accident and you're still busy paying Westbank, your car loan, but now you don't have a car, but you're still paying your car payment, how do you get back on your feet? So it is a very tough time to do that. I think though, on the positive side, cancelling altogether doesn't necessarily have to be the only option. And maybe if I can, I'd like to spend a little bit of time talking about the consumer and then in a business context. From a consumer, our advice would be is that before considering just cancelling that, consider what you can do to reduce that cost of your monthly premium. Firstly, good advice is to consider an excess. An excess is almost your self-insurance layer. It's your ability to actually control your cost a bit more. So consider a higher excess. Consider also whether or not everything on your insurance policy is really needed. Typically, your policy will include car hire, for example. It might also include hail cover. But those are two things that perhaps you can manage yourself. If you see there are big dark clouds, park your car under the garage and don't drive. So you can actively reduce your own risk without necessarily having to worry about being uninsured in the event of disaster.
Andrew, unfortunately, we've run out of time, but we do thank you for your insights and we hope to interview you further. Thank you so much for your time.
Look forward to that. Thank you very much.
Good stuff. Well, that was Andrew Coutts. He's head of intermediated services at Sanlam. We go back to studio now.
Nompu, thank you very much for that. We'll get more from her. She's at Parliament ahead of today's budget speech.